Excellent. So welcome everyone to this Friday afternoon seminar series presentation. And I'd like to start by acknowledging that for those here at UNSW on campus, we're here on Bidjigal land of the Eora Nation, and I pay my respects to those past and present. And I'm very appreciative that we're able to have this seminar today on this land, and welcome everyone online. I'm Chris Bennett, the Director of the City Futures Research Centre. It's my pleasure to welcome Dr. Henry Chin, who is an international thought leader in property real estate, based in CBRE in Hong Kong. He has a very long CV, has made huge impact globally the last couple of decades. I'm not going to go through Henry's full CV, but it's attached to the seminar series. He's had many roles in many international banks and property investment corporations, and has come to us today from Hong Kong. And I believe Henry has managed to have a record number of meetings the last week or two, probably more meetings than I've done on Teams. He's done face-to-face in Melbourne and Sydney. And I also note that your PhD was Oxford Brookes, excellent university, as other universities that you've studied at. And I think we've got colleagues who have been visiting Oxford Brookes, like I'm not sure if you caught up with Professor Richard Reed and others, but big warm welcome, Henry, and we look forward to your presentation.
Thank you, Chris. Stand up, or what do you want me to do?
Yes, probably
stand up easier.
We've got a camera on you this way.
See that for the camera. Okay. Okay. Thank you, Chris. Thank you, Chilin, to inviting me here. And I feel so sad because today is a Friday, it's a 4:10. It's time for drinks. And okay. It's really time for drink. Okay. It's really time for drink and not for lots of kind of lecture. It's great to be here. I said to Chilin, I haven't been back to university for such a long time. Although I and the visiting professors at Oxford Brookes, and I do a lot of online, and also I am teaching at my home university, National University of Taipei, and from time to time, and to pass on my knowledge to the next generation. So it's great to spend time with a student. I think we are in an interesting cycle. I think we've been locked down for more than 2 years, right? We haven't been able to travel for 2 years. So this time it's a revenge business travel for me. I have been traveling for the past, this is my 5th week. And it's brutal and it's horrible. I was in New York, Boston, New York, LA, Salt Lake City, Dallas, before I come to Sydney, and I so far touch wood, I haven't catch COVID just yet, and it's quite scary thought. But it's good to be here. And, when I was looking at when I travel, always we do real estate, we do urban studies. We need to know about what is the front and center of everyone's mind. When I was in the US, everyone is talking about interest rate. Everyone's talking about recession. That's a front and center of everyone's mind. The oil price going up, and disposable incomes decreases, the stock market volatilities. Every single day talking about that. And in Europe, when you're watching BBC, people talk about the war, Ukraine-Russian war, and people talk about energy price increases. When I was in Asia, people still talk about COVID. How many people there, how many people catch COVID. This is quite sad in Asia. But when I was in Australia on Sunday morning, it's exciting time for me. You guys talk about politics, right? You got a new prime minister, so which is fascinating. I think as a student, I think you guys are smarter than myself. So we need to keep front and center of those global issues, because we need to be closer to the market, closer to what matters to a lot of community things. I think for next slide. So what I'm trying to do is I will give you the global capital flows and also more of investment driven, and probably it's some related to you guys, some might not. So I give you some anecdotes, some stories, what we are seeing for the markets going on. I think because of the current noises on the global economies, a lot of people thinking about potentially about a recession. right? But as of now, our house views, we have no recession, particularly in Asia Pacific point of view. Asia Pacific, we definitely want the slow growth for 2022 and 2023. Two reasons is number one is COVID policies, COVID zero policy in China. A second one is rising interest rate. I think Australia, you guys are raising the interest rate by 25 bips. There will be more to come. For European market, it's the weakest area, to be honest with you, because of the war. I think when I was talking to my European colleagues, they say petrol is okay. The gas is a major problem for them. The disposable income, the shortage of gas is really making them so nervous. The slowdown in China has a profound impact for EMEA markets, particularly for Germans. Okay, so Germany get a lot of benefit for stronger growth for China. If China is slowing down, it really hurts Germany. And the US is a completely different story. I think US is running too hot, the economy, so therefore the Fed is playing the catching out game. It's funny enough, if you look at the past 40 years of economy history in the US, when Fed increase the interest rate, we come into recession. When Fed increase the interest rate, it come into recession. That really give you some nerve. That's why people are getting very nervous for the US market. But inflation is pretty much all over the world what we are seeing for that. And talk about economy. I think US is the most transparent liquid market. We all know that. It also has a longer history of our economy cycles. What we use in a practice world, what we are using for the economy cycles, using the unemployment rate. So you can see it's quite clear cycle in the US. A lot of people, you read the newspapers, sometimes they talk about geopolitical issues. It will affect the economy cycle. So those effects here is all about geopolitical events globally. You realize there's not much of a correlations there, right? And what matters, I didn't have time to put an interest rate, so knowing if I put an interest rate cycle here, you really can see the you can see the distinct correlations. Interest rate hike, unemployment rate shoot up. So this is why people are getting so nervous now, because the Fed was from 0.25%, the increase is 75 bips. By the end of the year, will be 200 bips. So this is something people getting very nervous or talking about. And then the number one, I think you should talk to your departments, economists, and also professors. You should ask them, can they actually forecast inflations? Because my professors, our chief economist is my professor already. And funny enough, he was telling me, inflation is at the 40-year high. Even he's 61 years old, he was telling me, probably all those economists, they lost their capability to forecast inflation. They seem to forget that what inflation is looking at now. And that there's no historical that is kind of volatile in terms of inflation. We enjoy the low inflation environment. All of a sudden, we are 8+% for the US. UK is even 9%. So this is hurting our global economy growth. That is the fact. But don't forget that not long ago, we are quite happy because after COVID, what do? We do a lot of, during the COVID lockdown, you can see the consumer spending is shooting up. But what do they buy? Durable goods, TVs, monitors. Do you guys buy bicycles as well, right? So this is the US. So that's why we are very happy because the consumption growth is coming up, stimulus pumping into the system, so people spending the money. But we realize this is running toward to the plateau. How many TV do you need? How many bicycles do you need? How many furniture do you need? So this is something we began with the goods sectors, but it's tearing up now. Remember. Second one, this is going to happen in Australia. Also, the US labor market is the first time we had a greater, you can see the supply is shorter than demand. We got more demand for the labor shortage. And then as of now, we got a 4 million workers short in the US. It's quite scary, actually. There's two fronts. One front is Trump. There's one immigrant to come in. That's for a number of years. That's always happened. But the other one is because of the COVID, A lot of people structurally just said, I do not want this job anymore. I do not want to work anymore. Some of my colleagues, you'll be so surprised. After the bonuses we received in April, she just quit. I said, oh, do you go to competitors or other better jobs? She said, no, I just want to have a career break for 9 months. I can afford to do so. I don't want to work 9 to 7 anymore. I want to rest. So this is also because of labor shortage. If you are going to see the stronger, how do I say, the pressure for the inflation on that part. So this is something, that's why the Biden is been opening up quite a lot of border for the immigrant, for Latin American people. I know for Asians, because I think Indians, you need to take a longer. And if you're Chinese, you take a lot longer to get a green card. But for any other nationals, if you want to go to US, it seems to be a lot easier going forward. Okay, so that's what we're seeing. And then as a result, the older wisdom are telling us once the US interest rate reaching to used to be 3%, we are in a danger zone for the inflation. But now everyone seems to be once we reach the 2.5% of interest rate in the US, we are reaching the danger zone of having the recession. But I can see the consensus is pretty much around this zone now. So therefore, that's why a lot of people think about we might have a recession, we might not have a recession, and nevertheless, for the America, they're definitely going to have a below trend growth. The historical trend is around 2% GDP growth, but going forward, I think the US is going to have a below trend growth before taking off again by the end of next year into 2024. So cost of financing, interest rate is moving up. Some part of this system is actually doing good because they were helping to ease the labor market. So people are coming back to the market that does, some company will not be as aggressive hire as the one we are seeing earlier. We can talk ourselves into recession. You read the Wall Street Journal, you read the Financial Times, we can be so bearish. But this cycle is somehow a little bit different. Probably I'm a lot older than you guys. So I still remember greater financial crisis. I think greater financial crisis doesn't seem that long ago, but actually it's quite long ago. Just looking at the CBRE's share price, I wasn't working at CBRE at that time. The share price has down to $3. Okay, so ever since the financial crisis, now we've been moving forward. The CBRE share price now is around $80. And the last year it's reached to $110. Why is that? Is it because we got so much liquidity pumping into the system? That's number one. Number two, all those companies that they try to clean their balance sheets, the private sector, they have never had such a strong balance sheet in decades. So therefore, their PMI index continue to be in an expansionary mode. So this will give us some nice cushion for the future growth. Might just avoiding some so-called recession. Hard landing, but that's one. The second one, I think you guys are going to feel it in Australia as well. Travel has nearly all recovered in the US. You can see, this is pretty much back to pre-COVID level. And then the air ticket is so expensive in the US. In the old days, when I do this travel, from Taiwan to US to Australia to Singapore back to Taiwan, I can buy the round-the-world ticket. But now airlines say, sorry, we don't sell round-the-world tickets. We are buying the fully flexible ticket for business class, right? You can change as many times as you want. Sorry, no, every time you change, we charge you $100 admin fee. This is the airlines cheeky, try to charge us to make out their losses. But nevertheless, people are back to travel. Tourism travel in the US, surprisingly, the business travel is so strong as well. Every single flight I was on in the US, 100% full. Airport, JFK, New York was notorious, right? Notorious, long security queue. A Sunday, 7 a.m. should be quiet. It still took me an hour to go through the securities. I lost my patience. Oh my God, where is the fast track? It's not fast track. UK is even better than here. But this is really, really terrible. But that is a good thing for consumers. The consumer move away from buying bicycles, TVs, they buy services, which is good for economy. And the other one is, this one is even more interesting, eating out. I also noticed that in Sydney. Monday night, we want to have a nice dinner with my team members in Sydney. We can't get any restaurants where we want to be. And then when I went into the restaurant, it was so surprised. It was packed on Monday night. That's the happen in the US as well. So this is just going to be good for us in terms of avoiding so-called hard landings for economic growth. That's the US. US really matters for us. And then this one is even more interesting. It's more closer to if you study on livings, residential markets. This is the major part is mortgage rate. I think US, they are leading the mortgage rate. You can see mortgage has been shooting up quite substantially and over the past 6 months. So what does it mean? It means consumers, they are not buying houses. They are not buying properties now. So consumers, they prefer to rent. And then so what we are seeing in the US is a house price has been softening. And the house purchasing value is declining. That's what we are seeing. I don't know about Sydney, but even I was very surprised in the US. In the US, the Sun Belt market, those are sunny states, Texas, Arizona, Florida. The Phoenix city, which I've never been there, the house price has increased by 50% for the past 12 months. Tampa, which is such a small city. If you go to America's real estate conferences, sometimes they hold in Tampa. And then that was also 50% cost increases. So that's a quite scary thought on that part. But nevertheless, because of that, we are expecting to see house sales, house price growth is going to slow down quite substantially. How about Asia Pacific? Do you guys feel inflation as a student? Do you guys increase the tuition fees on a month? No or yes? Tuition fees on an annual base, do you increase by 2%, 3% or?
It's a difficult question because we had a government that's just thrown everything up and changed and moved a lot of courses in our area up to almost 50%.
Wow.
But usually it would only be a couple of percent.
Oh, wow. So that will also hurt the university as well. So you can see the inflation is not so bad in our region, because one thing for those Asian countries, a lot of inflation, importing inflation, they absorbed by the government. So it doesn't really feel the pain through the consumers. But some market like Australia, my colleague was telling me the inflation, that sounds too low. I think Australia's expectation is around 6% now. So most of our economies are increasing interest rate to follow the US rules. Why? It's number one, we want to defend our currencies. If we don't increase interest rate, a huge currency depreciation. If a huge currency depreciation, we will have the problem to pay back the sovereign debt. A lot of debt are US dominated one. The second one is you try to defend your currencies. So that's why the capital, international capital, will stay in your country, not flying out. So that is something all the central bank in our region is trying so hard to do so. But the two economies, they are not going to increase interest rate, which is good news for global economy. It's China and Japan, particularly China. I think if China is also increase the interest rate this year, next year, we are having a problem. Because all the global, the monetary tightening policies, we have a problem. But China is cutting the interest rate, potentially going to have a deflation issues. So a good one for us. This was, if you do the residential studies, if you're doing the commercial studies, everything in built environment, this is front and center and front for everyone's mind. Construction cost is increased quite substantially across the globe. When I was in the US, CBRE, we own the biggest developers in the US called Trammell Crow. It's scary. The CEO was telling me, we cannot, the construction cost only valid for 1 week. So if this week you're not signing the contract, sorry, next Monday, different price. There's the weekly changes in the construction cost. I was looking at the ABC News this morning. It's also happening in Australia as well. It's not only for laborers, but also for those materials, supply chain bottleneck, all creating tons of problems. Australia looks low. But when I was talking to Texas, Chatham, I said, Henry, this is so low. I said, I don't have any, consistent comparisons. That's the consistent comparison I have. That's Australia is around 20%. So this will have a profound impact on the real estate industry, is because We don't have workers. We don't have how do you build the houses? So supply for commercial real estate, for residential real estate will be very, very different stories. The developer might go busted. You have seen the busted developers in Australia already. This is one of the issues what we are seeing. It's kind of huge impact in our industry. This is worrying. GDP is slowing down, that's for sure. But the one thing for Asia Pacific we think about APAC, we are not going to recession, is over the last 2 years, we're doing well, including Australia, is because we close our borders, right? Before this Omicron come to our life is pretty much, my life in Taiwan is really normal. I want to see the concert, I went to the gym every day. And Australia, I think if you are in Victoria, they hate it, they locked down for so long, but quite a lot of economy, they locked down. So that's how we cope with COVID. But the good thing is now European, US live with COVID. So therefore, Australia is opening up now. When I travel out by the end of April, I think if I come to Australia first, I need to do PCR. But I just arrived in last Sunday. I don't need to even do a PCR, just show my vaccination record. Singapore will be the same. So all the markets, what we are seeing is pretty much back to normal outside Greater China, means Hong Kong and China. There's no chance that China will open up their border for the rest of 2022. So why we want to highlight China? And because China is the second biggest economy in the world, COVID zero policy is still biggest uncertainty. Chinese government, they are smart. They are trying to categorize about low risk, medium risk, high risk. If you're the medium to higher risk in China, that's 59 cities. A lot. Okay. The second one is okay. China is so big, 60 cities doesn't matter. But if you look at the GDP, it's a third of the GDP has been impacted. So that's why people are thinking about this is the biggest uncertainties of what we are seeing for China. If you look at the export, retail sales, industrial value add, all has been hugely impacted for that. I also want to, two reasons for that. In our view, personal view, don't represent CBRE's view. The one reason is actually Sinovac is not as effective as what we are seeing, like Pfizer's and the Moderna. That's the fact. Number two is because they are going to the political leadership, selections by the end of this year, Q3, Q4. So in order for Xi to be re-elected, they can't allow the 1% of the population die. If 1% population die, that's millions in China. That will cause so much social instability. So therefore, there's no chance they're going to open up before end of 2022. That's one. Number two, I want to highlight how much this COVID zero policy has impact on the economy. Shanghai, I think like 25 million or 30 million population. They locked down for more than 2 months now. Have the wild guess how many cars has been sold in Shanghai in April? How many cars? They have got 25 million people live there. They are one of the major car markets. How many cars have been sold? Guess. 1,000. 0. 0 car being sold. That just gives you the idea that their COVID zero policy is a lot more severe than what we have experienced elsewhere in the world. It's really not allowed to go out at all. But now they can go out, but it's really restricted. So this is what everyone talking about. This is one of the biggest uncertainty which we cannot really forecast. Okay? Because of that, so that's a good and bad thing. Because of that, you can see PBOC, they're cutting the interest rate, quite aggressively through the end of last year. They keep cutting the interest rate, pumping all the liquidity into the system. And then what they're trying to do is not giving to the residentials. They're going to do a lot of fixed asset investment, infrastructure investment. In other words, it's good for Australian economy. Considering your government wants to have a better relation with the Chinese government. So hopefully that will be benefit for so-called Australian economy. We were joking, my colleague were joking, that because of the bad relation between Australia and mainland China, so your Australian wine and lobsters doesn't go into China, right? So the Hong Kong people, my colleagues said to me, oh my God, they buy a box of lobster and oysters, so at a cheaper price, they are happy. And in Taiwan, we had tons of oyster as well, and it's just because they lost a big market. But if like a better relations, this is definitely going to have a huge uplift for Australian economy. And nevertheless, the economy cycle is very, very different on that part. The third one is something is very, very interesting. It's about global supply chain. Without the war, without the China zero policy, we think global supply chain should be back to normal-ish on the third quarter of this year. But now, because of the war, because of China supply chain bottleneck, the COVID zero, you can see the price is still lingering around such a super historical high. There's no shortage of a cargo. You know, the cargo, they are empty cargoes by the seaport. They just don't want to ship in those lower end of the value. It's not worth it. They want to have a high end value to shipping. So that's the issue on that part. The second one, you can see because of the bottleneck, you can see global schedule reliability is barely making to 40%. The reason last week, if you follow the stock market, the US stock market was tanked substantially last week. One of the reasons, probably the news talking about Target, the retailers, and Walgreens has a weaker performance for Q1 result. Anecdotally, Target, they only received their last year's Christmas tree order now. Okay, they ordered Christmas tree 12 months ago. They should receive now. So therefore, there's a huge mismatching of all your stock inventions into inventories. So this is something is a very, very interesting. What I want to say is for those retailers over the past 2 years, I just want to just in case I build so many inventories just in case, right? But nowadays, if you look at the Target's result, they want to find a balance between just in case, just in time. So otherwise, you order last year's Christmas tree you receive now, it's not Christmas season, and it will dampen your margin as well. So global supply chain is not going to ease off for the rest of the year. Those are the risks. The real estate market is fantastic. If you look at like after GFC 2000, all the way till now, 20 years, you can see this is how much capital every year is looking for real estate. Buying money, putting money into real estate from direct deals, from value added, so different strategies. You can see 400 billions of the dry powder every year they want to deploy into the real estate. Plenty of capital into the system. Who are the real estate investments over the past few years? Who are the brokers that make tons of money, especially for last year? Because last year was a historical high globally in terms of transaction volumes. It was a high in US, it was a high in Australia, it was a high in Europe, high everywhere. And then you can see, even last year's historical high, Q1 year on year is still up by 34%. So that's why I just want to tell you, this stronger liquidity is continuing to deploy in a global commercial real estate market. Things are changing. We spend quite a lot of time talking about macroeconomic situations. And then the reason things are changing is because the real estate investment dynamics has moved, has changed. All the investors, they are worried about, they used to worry about uncertainty economy. I don't know what the economy is going to perform, but interest rate is so low and not worried. But you can see this in April, we did a survey. You can see every single investor, so they are talking about interest rate hike, the biggest worry. Higher than anticipation inflation, the biggest worry. The bank is not going to lend to me. LTV ratio is coming off. So those become front and center of everyone's mind. I know I really hope in this group in the future, you guys should more talking about ESG. The ESG for our region is lagging behind. I think this is a very, very front and center for Europeans. But you can see this low, but nevertheless, cost of finance is really going to have a huge impact on the real estate investment going forward. So if you look at cap rate yield, if you study real estate, you know what yield is, right? So it's the rent divided by capital value. You can see by default, you're going to think office should be the most expensive one, right? right? Office is a lease line, right? It's always tend to be quite expensive. And the lease line is the shed, warehouse, logistic. Because logistic in 2014, their return is 6.25, because it's all the way down to 3.7%. So the cap rate has in the retail, because of the pandemic structure changes, you can see retail is moving upward. So that become quite interesting dynamics. What we are seeing is also shaking what we are thinking for the real estate. But funny enough, when I was in the US for 4 weeks, we know the vacancy rate is so low, rental growth is so strong. By mathematical terms, we should think that this will compress even further. Now we talk about interest rates rising, government bond yields are rising. More and more investors say the cap rate cannot compress. The value should drop. The yield should move out. It's because the interest rate is moving out, cost of finance are moving out. So when I was presenting to the Texas, those property companies, they said, we don't want to hear that, Henry. I said, but in reality, if you buy Goldman Sachs corporate bond, on the face value $100, and now they are trading at a 20% discount, your dividend is 5%. That is cheap, right? I get a 5% with a liquidity and a corporate bond. What I need to buy real estate at 3.47%. So that's why people are start thinking about repricing going forward. It will be quite good. We have a little bit of a hiccup in our system to reprice the real estate, because you can see the pricing has compressed so much. And for me as a practitioner, I think it's simply too expensive on that part. The one thing we said the pricing of the reprice is the bond yield, the risk-free rate. You can see from the beginning of the year, that's what our forecasting. In the April forecasting, every single country's risk-free rate is moving up. Okay, only countries coming down we talk about is China, because they are cutting the interest rate. Japan is moving up, but still virtually nothing invest in the government bond yield. So higher bond yield is definitely across our regions on that we're having issues. So you can see, but Asia Pacific is somehow different from the US. We said we had the inflation, we had the interest rate hike, but it's less aggressive as what we are seeing in the US. So you can see our cap rate as a region is remain stable. We are not going to see up and down. We're still very conservative, go stable. But something for you guys in Australia, and I was with ESR CFO yesterday, I was talking about, this bar shows the yield between office and the logistics warehouse. So for example, in Hong Kong, and office yield is still trading office yield is still lower than the logistics. So here for those market, logistics is trading lower yield than offices. So that means logistics are more expensive to the office building. Just use I always argue is use the common sense, right? How easy to build logistic should be easy. Construction cost is easy compared to office. And then residual value, replacement cost, logistic always should be lower than the offices. How can they worth more than the office buildings? So that's why when I see the chart, I feel very, very nervous. So I always tell the investors, if they listen, I say, I'm researcher and contrarian, I will sell the logistic. I will buy offices because office in those market looks so cheap. Okay, so that's what we are thinking about. As a result, investor, what they are looking for, they want to say, okay, yields is so low, I want to buy office building, I want to do asset enhancement. And can I upgrade in a better quality of air? And can I up better quality of ESG fitting? So this is what all the investors are looking for. The second one, you can see tenant quality. It's very important because you can see when the economy coming down. I got a building, I fully leased. I said rent is going to increase. Some company, they are not making profits. They are redundant people. How can they pay for your rent? So during the financial crisis, lots of companies went default. They won't be able to pay for the rent. So now you can see more and more investors are looking at that. But funny enough, if you're talking to the company, like banks, like the big fours, all the things, they talk about ESG, right? But investors say ESG important, but it's not so important in my mind. So it's a very, very drastic differences on that part. This is why I just quickly go through this. This is before all those war happening. So China is still very important. Japan continue to be a #1 destination for the global investors in Asia Pacific. Singapore is #2 because the Hong Kong's lost is a Singapore's gain. Okay, and then #3 is Australia. So those 3 markets is going to be a major destination hub for all the global investors. If you want to come to Asia Pacific, those 3 seems to be the front and center of everybody's mind for now. So I won't talk about these investment strategies because they're less relevant to you, but I just want to highlight here, it's funny, in the US, have the wild guess, some of you listen to my conversation, what is the office utilization rate in the US? Normally it's 100%, have a guess, how many people back to the offices now?
10%, didn't you? Just
San Francisco is 10%, it's shocked. You go to Union Square in San Francisco, it's dead, homeless people. Chinatown closed Monday, Tuesday, Wednesday. And in country, China, US as a country, office utilization rate was 30%. Shocking, people are not going back to the offices. I thought Australia would be the same. Actually, no, our office is 70+% occupancy rate. People are already back to the offices. So that's why a lot of people, if you're buying the office stories, so many people are coming back to the better quality building of office. That's why we are seeing a trend. The second one is more of a difference is, when you're talking to so many people, they say, I don't like retail, retail is dead, I don't want a hotel, it's no point to travel. But now actually it's a revenge tourism, revenge consumption is really, really happening. So Australia is going to benefit. I was surprised I stayed at the Fullerton Hotel. I said, surely no one going to stay there, but when I check in, I need to queue. And then I saw that every day checking out, people is a queue there. So those kind of revenge tourism, those tourism travel destination is doing so well. And I heard my friends from Singapore, they're flying everywhere. And I think here, my colleague in Singapore, in Australia, I think every single one, they are going to Europe in July. And then it's so interesting. Every single one they're going to Europe for having a holidays and that retail pretty much the same story as well. And that's why you can see more and more people coming to buy off the retail stories. But final part, I want to share with you the occupier, because when you are doing the real estate investments, your textbook always tell you, we talk about capital markets. The other part we want to talk about is called space market. Space market is all about occupiers, companies' thought. You want to build an environment into a fit for the need. What occupier telling us? #1 big trend is a return to offices. This is the same time I took the photo. This is when I was in Boston, 10:30 in the morning. This is, I asked my team to take the photo for Hong Kong on the same day. No, May 10th, I took the photo first. And then I said, tomorrow morning, can you take a photo for me as well? So this is a Hong Kong office. This is a Boston office. There's a drastic differences. That's why I always say, where are the people? Because I was in Boston in the reception, I said, I can't see people. In New York, Fifth Avenue is a pack of people. But when I go to the office, where are the people? They are not in the office. They said they worry about COVID. But when you go for shopping, you're not worried about COVID. So this is a very, very drastic difference. And Americans are weird in that sense. And then so you can see in the office utilization rate in Asia, we already back. So it's a very already underway. Return to the office is a daily conversation. Even when I was in Australia and Sydney over the past week, they said to me, we don't really want to talk about return to the offices. People are back. The only companies that are not back yet is big banks. The banks are still empty. Accountancy firms are still empty. But all the others are tend to be back to the offices on that part. So we are well ahead of return to the office trend. But it's very funny. We ask the companies globally, if you're back to normal, how often do you need to be in the offices? So I guess the Asia Pacific companies, we tend to be more here, which is 40 offices and most offices. I have to say, I feel energized when I come walk in the offices. And I've been working from home for so long, I get so bored. I hate Zoom calls. And then, but you can see for Europeans, it's moved to that side. If you're doing some studies, I think that would be fascinating to study, to look at globally. What is the, how do I want to say, if you look at this, you can look at this globally to see hybrid working, what's impact on the office demand globally. So if you had a 1 day a week, a 2 day a week, a 3 day a week, what is the quantified demand for decline for the office demand in the future? Our US colleague, they did some modeling work, which I haven't seen the work. They tell me the conclusion is if you do the hybrid working like the US is doing, potentially the future demand for office is down by 9 to 17%. It's quite a lot, 9% to 17%, quite a lot. So this is something worth of, no one had the answer. So this is something, it's a fascinating study, it's people that are dying to look out for. And so also Asian companies, we are a lot more positive. You can see over the next 3 years, we want to lease out more spaces. But you can see Europeans are very, very different stories. Americans are very different. Yeah, want to increase, but also want to decrease. So you can see that that's why people are coming back to Asia to buy more offices, because we are more positive in terms of future demand for the offices. Second one, we're talking about inventory level, supply chain. This is the front and center of everyone's mind. We talk about just in case and just in time. This is a fascinating story. We're talking about nearshoring and reshoring because Asian economy, we locked down, shut down, start reboot over the past 2 years. So therefore, lots of companies, and they kind of back to their home country. They don't want to be in China, Vietnam, they shut down all the time. So therefore, you can see reshoring back to so many different countries. And then you can see Australia's benefit from that. Japan, Korea, they all had quite a lot of reshoring activities coming back. And then when we talk about diversifying the sources, because of the geopolitical tension we have experienced during the Trump time. So most of the companies, they talk about China plus one. China plus one is a benefit for Asian, Asiana, and the Indian. The Asiana economies, I don't know whether we have a student from VIP, Vietnam, Indonesia, Philippines. Those three seems to be a benefit for those China plus one strategies. Central Eastern Europe is fascinating, particularly for the war, Russian and Ukraine war. Poland, no one wants to invest in Poland. But I was talking to European colleagues, they said post-war construction in Ukraine will be massive. And then therefore, more and more companies are coming to invest into Poland. Next to Ukraine, as a part of the NATO, part of the EU. So therefore, Poland is somehow going to be, the post-war is going to gain a lot of stronger economy growth as well. And Americas is a Big Mac. It's in Mexico, Americas, and Canada. So they call it Big Mac. We call VIP, they call it Big Mac. That's kind of diversify their source as well. This is also very interesting because the US has high inflation. Therefore, they try to remove the tariff. Trump imposed those Chinese goods, 300 billion of Chinese goods, a higher tariff. Those tariffs are expired in 2022, July. So they are reviewing those tariffs because if they continue to put those tariffs there, the inflation is not going to ease off. So potentially, American government is going to remove those tariffs to ease off the inflation for the US. Final one I really want to highlight here is that you guys are the future for us. ESG is very, very important. I don't know anyone doing ESG research or not. Everyone is talking about this, particularly Europeans. It's going to be mandatory for Europe. So you can see all the markets, countries, cities, they all having a mandate for the goal. We want to be carbon neutral. And all the major companies, they are leading ahead. I think Westpac is an Australian one. And you can see they all saying about when I want to be carbon neutral. And the investors seem to be more of lagging behind. I was very surprised Hong Kong is ahead of most of the Asian economies because Hong Kong is so environmental not friendly. Everyone's having the air con on their 22 degrees, and we need to wear jacket in the offices. But they are thinking about before 2050 to have carbon neutral, even ahead of Singapore. So it's fascinating to see that global goal is priorities. And then the reason we want to global for priorities for Americans, they said they really want to protect the environment. I think similar to Australia, where you guys feel that, right? It was either drought or flood. I think the rain was tremendous over the last 2-3 months. So this is the front and center of everyone's mind. But unfortunately, our Asia Pacific investors, they are the least keen one. They are not just not keen. They say we are considering, but we are not implementing, see how it goes. And then for the real estate investments, when we're talking about ESG, it's all about energy savings, all about how do you have a better well-being facilities. And then if your building, we talk about whether you have a green premium or brown discount. For our world, green premium, normally we don't have a green premium, but if your market like a Shenzhen, the only 39% of the building are green, I can charge you 25% discount. For Hong Kong, most of the buildings are green, so your premium is only around 6%. So there are quite a lot of difference for that. And all the companies I show here, early on here, you know what, if you want them to be your landlord, they don't want to be part of your building. If your building are not green, I don't want to be part of it. I want to only list for those green buildings. So that means the investor need to catching up, because if you don't do green buildings, they are not going to occupy. It's not green premium. We call it more of a brand discount on that part. So that is the last slide for me. So the occupiers, what is the next ESG thing? You can see implemented or plan to implement it. You are the future for us. So how to manage everyone's employment, health, and well-being is very important. And also the waste deduction programs. I don't know are universities still doing or not. In offices, we become paperless. We haven't print anything such a long time. So this is something very, very important. And then when I was in US, I tell you another thing, it's a funny thing. A European colleague, myself, and a US colleague, we went to In-N-Out for burger. We're using the plastic straw. A European said to me, shame on us, because it's still plastic straw. And that's how sensitive they are. And then Americans said, I don't like paper straw. I just want a plastic one. And I said, I don't mind. But the European, really a plastic cartridge, a European just hates it, refuse to use it. So this kind of waste production reduction program is very important. And also local procurement, the local suppliers in your supermarket. Why do I want to buy eggs? Even in Hong Kong, I buy eggs import from Australia. The eggs import from New Zealand. This is crazy. And this is something I think everyone's top of center of mind. For real estate spaces, people talking about green buildings, talking about in the leasing part, if I want to lease out to you, if you don't have that green objective like me, I probably don't want to lease with you. And also renewable energy is quite a big front, particularly for European market as well. So those are the quite important topical things for ESG. So this is also equally, I hope, urban studies and all the people should emphasize on those to create a better environment. That's it for me. Willing to happy to take any question you guys may have. Thank you.
Well, thanks a lot, Henry, for that global perspective. It's interesting to see some of the differentials there between, say, people returning to work from Australia compared to the US. I'm somewhat surprised with that, given the sort of the policies that the US had, quite laissez-faire policies under Trump around vaccination, but it almost seems like they flipped and now, are very cautious in the offices for some reason.
Yeah.
I might open it up for questions. We've got some questions coming in. If we have any coming in via the chat, can you please use them? Use the chat for the online questions. Haven't got any there yet. Any on the floor? From the floor?
Yeah. Okay, take over. Shots one.
Mustafa, thank you very much for the presentation. I think it's brilliant, given a global perspective, right? You know how you talked about the construction cost increasing on a weekly basis?
Yes.
Right. How is that affecting lending from the bank? Because you enter into an agreement with the bank, and then if the cost suddenly increases, how is that affecting lending with the banks?
These are brilliant questions. The reason we're getting very, very nervous for next year is when those companies want to get the construction loans, when a company, for example, I bought a building and want to refinance, the banks become so cautious. The cost of financing increases, the lending ratio is dropping. So do you know what happens? A lot of construction has been stopped. In Europe, in US, they stop it. They just say it doesn't make any sense, too much risk. And then for the building, if existing buildings, a lot of investors say, well, I need to refinance. My finance is coming to the end. I am selling it to the next buyer. And that is not, initially I want to sell $100, so people can buy $100 or above. But now the existing owners say because of the cost of financing increases, they are willing to take a 10% price cut. So I sell $90, for the next buyers can have the playroom to play the number. And then my owner, I still make a 20% return. It's okay. So that's what we are seeing in the US. So that worries us a lot, especially the activity will drop and the pricing will drop. That means the fees, the revenue for company will decline as well. So this is a huge thing that we're worried about.
Thank you.
Thank you. This is a brilliant project.
Well, one of the things that struck me is that one of the figures you showed that inflation rate is so off in the United States, and which federal bank is decided big move, increase interest rate is ever seen. With a huge impact on property market, I guess, and also we are homeowners here, quite worried about Australian government. Reserve Bank of Australia start to increase interest rate, and what you see that how far we actually goes to interest rate might be, and also how it's likely affect to property market.
I think
Yeah.
the good things for that is the US is going to increase interest rate from 0.25% till the Fed rate going to around 2.5, 2.75. That's the core scenarios. That's what we are thinking. And but if you're an asset owners, you feel okay because your house property price has increased. So therefore, it's for your home livings. So therefore, it should be okay lah. It doesn't have a huge impact. But if you're new buyers, you've got a huge problem. Got a higher home prices, a higher cost of financing. That's why home sales going to decline. For Australians, I don't have Australia number on the top of my head, but I think Australia interest rate, I think this year people seems to believe initially people think about you guys only going to increase the interest rate from Q3, but you already increased one already. I think June is going to increase the interest rate again. I think you're probably going to reach probably 1% of the interest rate at least. And then from 0 to 1%, it sounds a lot, but if you look at the financial impact, I think it's a lot less. A lot less. That's what I can think of. But I don't know. This is an interesting timing for us.
Yeah. So basically, thanks very much for the presentation. That gave like a full overview of like how real estate is doing in Asia Pacific. My question is from a research point of view. So there's been a lot of emphasis on commercialization of research. From the university level.
Commercialization of research.
Yeah.
Okay.
And commercializing like practical research. And we also have like one of the main research priorities within our center is also working with real estate as well. So in that context, what would be the question which real estate industry wants answered through research in the next few years? What would be that?
ESG.
ESG. Okay.
It's really an ESG. We know all about ESG is important, but no one knows how to deal with ESG. Apart from, I change your window from single glazing to double glazing. Apart from, I do the Western management. What else can you do? No people knows about it. I show you one anecdote. In the City Development Limited in Singapore, they are one of the major developers. I know their chief sustainability officer. She has been there for 20 years. She said 10 years ago, they own a big portfolio. They told to their tenant, can I increase your temperature, centralized temperature, by 1 degree? So it's 24, it's shifting, right? Just increase by 1 degree, you don't feel anything. Took her more than a year to convince all the tenants to do so. So therefore, they are the front foot of that. They did it more than 10 years ago. Now it's easier. But all of those things, no one knows how to deal with it. Plus, if you add wellness, you get a LEED certificate, neighbor rating, right? But if you bring into wellness, because all the people want to be the wellness being, that's a facility. What does it mean? No one knows. And also, that is something really strike us a lot. And then no one had the crystal answer. I think that's an urban study people we need to help, academic to help us.
Henry, there's an online question from John McFarlane. Hi, Henry. Thanks for a great presentation. What do you think are the chances of a global recession, say, in the next 18 months? And other than China, what are the major risk factors?
Okay, and I've been saying, John, is it in Sydney or Melbourne?
Sydney.
Okay, and our core scenarios is a 40% recession, 60% no recession. 40% recession looks low, but I have to say we have increased from 20% to 40% in Q1 to Q2 now. So that's the building of the recession scenarios. That definitely is on everyone's mind. China played a big part. And also, I think the confidence for consumers, for the stock market, for all of us, because now if you look at the US stock market, it seems to be a bear market. We are losing the stock value for 25% in a week. So we might talk ourselves into the recession. I think the biggest risk apart from China is also those confidence. The second one, I think the war. I don't know how to say this. Funny enough, in Australia, when you see the news, do you guys talk about the war? Yes, still. What do you guys think about the war? Is it still ongoing or is it ending? Your view, huh? It's annoying. Americans think about the war has ended.
Because it's not on the front page anymore.
It's not on the front page anymore. And also, American won. American won because we sent the weapon to Ukraine and we won.
We must think of
Yeah. And Europeans are very bearish. Europeans said it's not going, it's going to be lingering around, and Putin is going to, you need to cut the East Ukraine to give it to Putin for him to have a graceful exit. But Ukraine doesn't want to do so, right? So this is a huge uncertainties. So therefore, I was talking to my colleague in Japan, even Japan Post that stopped a lot of the shippings, air mails from that to that route, so derouted. And also flights from Asia to New York, they avoid Russia. They go on this road for 16 hours, it become 19 hours flight now because they're avoiding that route. So this is a kind of profound impact. So the war is the biggest, in my mind, apart from China. China is managing the COVID zero. They are closing loop operation. China will manage it okay for us. I'm more worried about the Europeans, the war.
Just a quick question around supply chains. You talk about, China not likely to sort of start to open up until maybe
Next year,
2023. And with China being the global powerhouse of manufacturing, I mean, we ship our iron ore there, steel manufacturing, so forth. We're having, as you said, we've got all these logistic supply chain issues already, which are, price of steel and wood in Australia has gone up 30%. So if China is looking at not coming back into production in 2023, what are sort of the forecasts there for? Is that compounding impact on supply chains, or is it sort of just?
They are trying so hard. So they are using the Winter Olympics model. They had a closed loop operation. So in and out of China shouldn't be an issue. Nowadays, what we see the problem is the transportation within China, because the truck movement, everything is coming down quite substantially. In and out of China, we track the Shanghai to LA, the in and out of China, the traffic seems to be working okay. But also closed loop operation, I don't know how long they are going to last. Because if you go to Google to look at the camp, it's fascinating, just type lockdown Shanghai Pudong office building. Can you believe it? Because left in the lockdown, you're not allowed to go. So all those people are going back to the offices. We call it sleep in the office to keep the system working. And that's unusual in Western society, but that's how China works. So all those factories, they are restarting the productions, but all the workers, they are staying in their facility. They are not going
In
home.
the factory.
Within the factory.
Wow.
The port is also the same. So they are using as a closed loop operation to avoid the severe disruptions.
Okay.
So hopefully we're getting better. We cannot afford another recession.
I guess that's good news for supply chains, but probably very difficult for those people and their well-being working in factories.
And good for supply chain. So therefore you can see the supply chain the target last year's Christmas tree. This is so funny. Last year's Christmas tree, you see it now. So but I think the American was so optimistic. They said, oh, don't worry, Target doesn't want it. We still got a bargain retailers. Target can give it to a nice bargain retailer to sell them the stock. I said, that's a Christmas tree. How about TVs? TV last year's a model, you order, you have to wait. Those are a huge issue. Life is really, really back to normal in the US. And I was having my masks in New York for first few days. When I was in Dallas, I didn't even wear my mask once. Probably because I'm Asian, worry about the gum as well. And that's the kind of things that are quite nervous in the US, especially Texas. But they are pretty much back to normal. Like here, I feel they are back to normal.
Not for the officers.
Office here, US definitely not the offices because they keep saying, oh, we worry about people on the COVID is rubbish. I went to musical, all packed. I went to all packed.
They just don't want to go back to the office.
No, you know why they can do so? Because there are shortage of workers, so they are allowed to do so. And then nowadays, if you want to hire the people, we said we want you to be in the office 4 days a week. It is a deal breaker. They don't want.
It's sort of interesting because I think, Australia, we had harder lockdown, obviously, than the US. And talking to, I guess, people in the room and so forth that are coming back in, and, we've got people coming back into the university. A lot of people are coming back because they, like you were saying, they don't want it for yourself. You don't want to be working at home. Like everyone's sort of sick of, staring at the same pot plant for the last 2 years and wants to get back and coffee places and interactions. So it's sort of surprising that the US is
really
going
surprising.
the other way.
Funny enough, another story tell you, when I was in LA, I talked to our LA business. I said, oh, by the way, I'm passing through LA. I want to see clients. But in the end, they're so happy someone is coming through LA. So they organized 2 table lunch, invite clients all come in. My feedback said, oh, so happy to interact with people. I haven't interacted with people for 2 years. I said, really? Yeah, we always work from home. People don't come to the offices. It's a kind of smaller event. They loved it. So hopefully, they're out for shopping, but they don't come to the offices. So really, hopefully, they will be back to normal. But they are the worst. Also, second thing, their offices are so boring. If you haven't been to CBIE office, you go to CBIE Sydney office. Our office is pretty. It's very nice. But if you go to our American office, they're horrible. They are not inspiring for you to be there.
So I'm conscious of time. I think we're a little bit
Thank
over
you.
the mark, but it's been an excellent international sort of expose of what's happening in property and finance markets. So thank you very much for your time, Henry, and
Thank you.
sharing your insights with this.
Thank you, everyone. Thank you.
Okay, I think that concludes our presentation. And we have another seminar series, I think, next Friday. Is that right?
No, fortnight,
Okay,
yeah.
back to the
So,
fortnight.
yeah, Professor Halforson.
Hal Forson, yes. I'm sure he's been lucky to grab Hal after all of his media at the moment. So thanks everyone online, and we'll see you at the next seminar. Thanks everyone.